You have a strong close on Friday to the upside. You're getting continued momentum to the upside. Retail stocks leading the way. Surprise, surprise. Bitcoin moving up. Chip news. Well, good for the government. I don't know about for the two companies involved. Earnings, not much. AI warns on Friday, tried to sneak a bias. Really didn't work out, so good for them. New guest today, 8:35. I'm excited to talk to Danny Kersh. He's head of options at our good old firm, Piper Sandler. It's me and Triple D on this Monday. Let's get it started with pre-market prep.
The volatility right now is really incredible.
Wow, look at that consolidation on the upper right chart.
You know what we've seen this earnings season? Some of these expected moves get even more violent. This is why I have switched my strategy 10 years ago. And if you're chasing, you're in trouble.
Okay, good morning, traders and investors. Let's get to the big board. You know what's going on. S&Ps are up almost 12 handles, right at last week's high. We'll see if we can continue the upward momentum. The buck up slightly at 98.19. TLT having a little bounce ahead of some big data this week. Up 31 cents at 87.71. Crude trying to rebound from last week's slacking. USO up 74 cents. Gold tariffs? That's not good for gold. Down 253 at 310.52. SLV out of the 35 handle, down 58 cents, 34.30. And Bitcoin getting some news over the weekend. Nice bounce. The futures are up almost $4,000, just under the 121K level. Triple D is going to hop on the stage and join me on this Monday. And Monday, Dennis, good weekend.
It was a fun weekend. I ended up at the island yesterday. Beckwith, it was really nice out there. Beautiful, 89 degrees, but great day to stay on the beach here. How was your weekend, Joel?
Oh, good. We had some visitors and plenty of entertainment for them. A lot of cooking, a lot of good food and everything. So good, but relaxed, refresh, and raring to go. Remember, Ben used to say that. They used to quote the squawk, and that's how we are on this Monday. Good old Ben. Yeah, we had him on a few times, and then haven't been able to get him back on again. So let's do a little revisionist history here, Dennis.
I got to take over here, though, because we got breaking news here. Micron's breaking right at 8 a.m. raises Q4 fiscal 2025 revenue guidance to $11.2 billion. MU, which had been showing a lot of life the last few days. We've been talking about it, breaking out and showing life, does indeed come out and raise revenue guidance here this morning. So the stock, which almost got down. I was hoping to get into the 90s. I really wanted it in the 90s. Didn't quite get back down there to 103, but climbing. Had a great day on Friday, and now big time move here this morning. And now we're not even that far from the highs of the move here for 2025. Not all-time highs. We were higher than that in 2024, but getting close here, Joel. Give us some technicals. MU as they raise guidance.
Well, first of all, did someone give that an upgrade? There was some major catalyst that we were talking about.
On Friday?
Was it Friday? No, it might have been earlier in the week. And it was one of the days that Apple was moving up a lot. And I said, I don't know if I would chase Apple, but and Micron, I can't remember what the news was. There was news out, and I said, I was thinking to myself, is this the catalyst? To give Micron, and I think that was maybe on Thursday, and it did have a red bar. Whatever, revisionist history. This is a big move. Dennis, it's almost back up to the high of the move, as you just mentioned. You just spiked to 125 and a half.
Yeah.
And where do you have multiple highs here? Boy, this is a big move. Folks, there's 3-4 highs between like 125 and 126, 126 and a half. So I don't know if I'd be chasing it up here. I don't know if I'd necessarily be ringing the register and having the rush out of it. But you got a catalyst. I wish I could identify it. I'm looking at my different AI demand, tariff relief, big tech announcements fuel momentum. So maybe that was it on Wednesday. But heck of a move for Micron.
Big move from Micron. And then also breaking at 8 a.m. I know a lot of people are following this story of SBET. The stock has been moving up significantly here in the last few days, while that momentum was trading up over 25 this morning. Just went south because they are doing a $400 million direct offering. That was right at, I believe, 8 a.m. that got announced here too, Joel. So if you're looking at your chart, you'll see the quick drop just now. Yeah, it was over 27 this morning. This thing was up over $3 this morning. So you know what? This is the problem when you get these smaller companies and they're burning cash and they need money. They get the rally and then they drop the offering on you. And that's what happens here again. We see this time and time again.
These offerings, well, I mean, they did that one offering after it went over $100, and then they did an offering at 10. I mean, I thought I'll just go an overall perspective. These offerings have been getting bought. I mean, they have. So exceed 3 billion following 400 million registered direct offering. If you've been waiting to get into this stock and you didn't want to chase it, let the dust settle, after the offering and perhaps, but right. I mean, what SoFi, what did they do? I still remember that price. That was 2085. So just talking in general terms here.
They're getting bought on the loved stocks, on the retail darlings. And, what we've been doing here on the STN room, in the Friday night trade is I took 38 trades on the close on Friday, and I just littered it with retail darlings. And I'm like, why? Because those are the stocks that continue to go. And we had the list, obviously, we post all these in the STN room there for other people if they want to participate or not. But I mean, there's so many retail names. This is really what is driving the bus. It's story, it's excitement around certain names. I mean, some, people even talking, of these other names, that are getting talked, like obviously we'd open with Eric Jackson. But then you've got also, recently Tom Lee really talking Ethereum, and people are all excited with this BMNR name. I mean, there's so many different retail names, but SoFi is just your classic name that seems to pop. It seems like every Monday morning they just get excited over the weekend, they pop that stock too. But there was just a pile of them, that are just going here now. And this is really a retail driven market here again. So retail has, is taken over and is now driving the bus. And we've got to understand, when retail is driving the bus, there's certain names that just don't participate. And we know what those are. People don't care about, beating down value names. They care about story. They care about growth. So that's why when you see offerings done, on some, dodgy old stock or not a sexy story, those offerings are ignored. But when you get SoFi does an offering, they're looking, okay, I can get it at a better price here. So you got to look at it that way too, is does the stock have a story? Then the offering is more likely to get bought.
Do we want to jump to the other retail darlings? Now we're getting a little bit of a head of a schedule, or a former retail darling in the marijuana sector.
Yeah, so this is just news we're breaking to you. And then over the weekend, Trumpster here. And again, we'll just keep saying it. The thing that matters the most is anything that Donald Trump says. You can love him, you can hate him, but you cannot deny that he is moving stocks like no president ever has. So Trump weighs reclassifying marijuana as a less dangerous drug. This was over the weekend. And obviously big pops here for all the marijuana stocks here this morning. Again, this is just rumors here right now, nothing confirmed. But if you look, Canopy Growth, CGC up 23%. Tilray, which is only a 70-cent stock, up 21% TLRY. If you want to look at, the ETF MSOS, that's up 11% here this morning. Just a pile of names here trading a lot higher on this rumor that Trump is going to reclassify marijuana as a less dangerous drug.
Can you say oversupply? I know that Michigan really took the lead a lot, and now these places are closing. A lot of these places are closing. Very competitive here. Very.
Well, they've all been killed. I mean, we've talked the marijuana stocks on this show for 5 years. And I've always said none of them made any sense, when you have, and I compared, and looking, because, we had Afria and we were looking at all these other ones and we were looking and saying, hey, you got a greenhouse full of pot plants. Here, you got a greenhouse full of tomato plants, and that's worth 10 million. And you got the same greenhouse full of marijuana plants, and it's worth 6 billion. It didn't make any sense. So, I mean, that was just, and now obviously, with regulation and obviously, Canadian deregulated, that a long time ago. But I mean, the story here just, disappeared. Now, that doesn't mean these things can't have pops on headlines. And I mean, if you bought CGC at $1.53 or $1.25 yesterday on Friday, you're pretty happy that's $1.54. So, there is these pops, but again, the sector has just been in shambles here. And it seems like every time they get any type of hint of good news, that, that's the end. But, these things are beat up. There's short squeezes potential in here. So, are you shorting a 78-cent stock? I never like short any stock under $5 because they can just move so quickly.
Dennis, I got tomatoes in the chat before you said the tomato analogy.
The tomatoes are coming at us here.
But let's just go with the most broadly. But if you want to do at least it's a $4 stock, and I do think this thing have it has decent liquidity. Nice move on Friday, follow through today.
MSOS, you're talking?
Yeah, MSOS.
That's one of the ETFs. Yeah, it's probably the best way to cover it.
I mean, what else is over $1 or $1.50?
I mean, what stocks are in there? MSOS here, just for fun. Like, I've not looked at. I do trade pot stocks, and I am long some of the GRWG, but that's just for a short-term trade, and I'll be selling that today. But MSOS, can we find out what's in that easily?
I think so.
Village Farms, Terra. Yeah, I can find out some of the names.
Whole VFF.
Give me the technical, and I'll go get the components.
You said VFF.
No, I'm saying give me a technical on MSOS. And then, VFF is in there, and then I'll jump in all these components.
I'll just go with the short-term data pre-market high just made on the last bracket at 437, and you're only 20 cents off that. So our number one rule in pre-market prep, if something's moving in the pre-market, you want to see strong follow-through in the regular session. So you got to climb 20 cents. We'll see if profit takers have anything to do with it. Your next monthly high, that is comes in a nice area too, 460. That was your high in December. After that, they get a $5 bid in this thing, the things open up. But first things first, pretty good resistance at 450. We'll see if the people that bought it on Thursday and the people that bought it on Friday are ringing the register here. Over $4.
Half the stocks that are in this thing don't even trade on the public exchanges anymore. Like, they've all been, moved because the prices have gone so low. But there's Green Thumb, True Leaf, Glass Home Brands, Cresco Labs, TerraSend. So there's a bunch of smaller companies here. Cureleaf, True Leaf, Green Thumb, the three main components. Those are 75% of it, those three companies. It's like GTBIF.
I have no idea what these.
Yeah, I know. You had to go in all because they're all off exchange, and they're just not even trading, or they're trading on smaller exchanges there too, the OTC market. So they've been beat up pretty hard. So it's been a tough sector to invest in. And I just want to continue on the news parade here, since we're just flying through the news here this morning. The other stock, your loser of the day here, Joel, is going to be C3AI. And they did the Friday night news dump. And we talk about this when you want to put the news out. Sometimes on a late Friday night, they try to drop it when nobody's paying attention. Well, people still paid attention. C3AI, 7:30 p.m. Friday night, comes out with preliminary results, and they're not good. They also announced restructuring sales and services to accelerate growth. They're looking at GAAP operating loss of up to $124 million. They're getting multiple downgrades this morning. D.A. Davidson downgrading to underperform. A pile of other companies here, if I just go through, giving downgrades here this morning. We got D.A. Davidson, Wolf, President's Capital Management to reduce Needham. Looking at it, talking about it as well, although they didn't do a rating change here. Wedbush lowers their price target here. So just a pile of downgrades here for C3AI. The stock with the best ticker symbol is apparently not the best company.
I mean, if you're going to wait till 7:30, why don't you just wait till 8 o'clock?
Wait till it's closed altogether.
Yeah.
It's there you go. There's a tip for all you companies that want to warn on a Friday night. Wait till after 8 p.m. to do it, because the market was still open, so it started getting hammered on Friday night. This hammering has just continued through the entire Sunday night trade and obviously into this morning here. It is now down 31%. Is this the dip you want to buy? Well, we've been talking about, dips to be bought. It's usually not the ones where they're lowering guides. And here's a stock that's broken trend, has no momentum at all. Again, maybe they should just sell the ticker symbol because the ticker symbol's got a lot of value. AI. That's a joke. But I mean, it's the best ticker symbol, but this stock is just a mess.
$17 was your April low. And now you're trading at 15. So if you felt you wanted to buy the stock at 17, you're getting a $2 discount to the April low is one strategy. The other strategy would be let this thing shake out a little, settle down a little bit. Prove to me you can get back a 17 and hold 17, and then it's a different technical setup trade. If you were short this thing and you got puts that are expiring today or this week, it's a whole different story. But former low of the move, 1703, you've already bounced off the pre-market low of 1453. Actually, there's someone in there nibbling at the 1450 area. So we'll see. You're 70 cents above the pre-market low for C3AI.
So we had a lot of news breaking there at 8 o'clock, so we kind of went out of order. But if we get back onto schedule here, the main news I would say from the weekend is probably this AMD NVIDIA headline here. And both NVIDIA and AMD are trading lower here. So AMD and NVIDIA agree to pay 15% of their China chip sales to the U.S. government in exchange for export licenses. Now, with this news, obviously that's a little bit less revenue for them. So NVIDIA and AMD both trading down. But what I will say is they are rallying off the lows once again by the dip re-emerges here. NVIDIA at one point in time was trading down $4, is now down only 50 cents. AMD, another stock, was trading down substantially here this morning. If you bring it up, Joel, we can see it was trading down about... Wow, 167 over $5 and is now down only $1. So, I mean, buy the dip re-emerges here again. Again, AMD and NVIDIA are two of my largest positions in my long-term portfolio.
Well, I mean, it's kind of a head scratcher, but can't talk politics, can't talk government and business, but the end result, they're still selling the chips, right? So if you have to pay 15% of selling something or not selling it at all.
Yeah, and it may not be that bad of a thing. I mean, we know, food for thought. Most of these tariffs deals have been landing at 15%. This is the Trump number, 15%. We can clearly see that across the board. He's had multiple deals, Japan, France, wherever, multiple deals with obviously 15%. So now it's not a coincidence. 15% is the tariff number here for AMD and NVIDIA or whatever to sell, chips over here too. So Trump, the 15% number is obviously his number, and the market was accepting of that. So is it going to be accepting of this as well? Probably. So the people who are selling AMD down 6 points this morning aren't thinking outside the box and saying, hey, market has rallied on 15% deals before. I think this is not that bad of news for AMD or NVIDIA.
We'll do the technicals just a little bit separately. AMD, nice recovery off their earnings. Their earnings hit double close area at 172.40, 172.76, down $1.88. Let the street decide. If this is no big deal, we'll get back up to that area, hold the area, challenge the recent high of the move. NVIDIA, just a love stock, way off the low of the day. 182.70 all-time close. You got two numbers. The all-time closing high, 82.70 on Friday, and 183.86, your all-time high in NVIDIA. That was made on Thursday. So a couple levels. As far as coming in here, buying the dip now, maybe I missed it, but let's see what happens.
I think we missed the dip here. And, let's just talk, overall, AMD obviously had the big pullback there and then pulled back every time it seems to dip, though. And again, the retail darlings keep getting bought. And we are in a bull market, folks, a bull market being driven by just a select number of retail names and a lot of other stocks really not participating that much. We've talked about this lately. where, IWM kind of gone nowhere for a month. But, new leadership with Apple. We got to talk Apple here just again from Friday. I have never seen a 3-day move in Apple like this that wasn't earnings related. So this was obviously all related to, Tim Cook making a deal with Donald Trump. Trump drives the bus. So retail drives the bus, and in all these individual names. Overall, the macro picture, Trump is completely driving the bus on everything. And there's really just passengers here. Nobody else is even giving input in here, at this point in time now. Trump matters the most out of everything, and then everything else doesn't even matter that much at this point in time. So Trump driving Apple price, driving pot stock prices. He moves something 15 to 20% every single day. So you just got to be paying attention to what he's saying next.
This is the biggest 3-day move to the upside in Apple since 2020.
Yeah. When we were back during COVID times and we were getting stocks killed 10% a day, the S&P was down 10% one day, and then they were rallying back like crazy when we realized that COVID wasn't going to kill us all. But it was it's an unbelievable move.
It is.
For a market cap size move of Apple, that is astounding to move from 200 to 229 in that 3 days. Does it continue? Well, the stories, got Trump behind it now. And we saw what happened to Tesla when, Musk got fully on board, and Tesla started to explode. So now that Tim Cook and Donald Trump are buddies, Tim Cook at the White House, thanking him and kissing Trump's butt, which he really likes. That's where we're at. Apple is now a Trump stock. And that's not a bad thing if you're invested in Apple. He's in there for 3.5 more years at least. Not a bad thing for Apple.
Gay Fave, question for Dennis, and I can weigh in on it too. Would you chase it up here? Which I know what your answer is going to be.
Well, it depends on your time frame.
Yeah.
Am I investing in Apple up here? I wasn't investing in Apple at 200. I think, it's an iPhone company that's got, a staple that's got a ridiculously high multiple. But that doesn't mean I can't trade it. So yeah, on dips, I think Apple's, getting bought on dips and scooped up. Do I think Apple's high is going to be Friday's high of $231? Probably not. There's room to 240, 245. And when these stocks going in one direction, dips get bought. So I think now momentum has gotten on side of Apple here, and dips probably do get bought.
And it was like a perfect storm, right? Because they're just looking for something to buy, and here you are, Apple, nothing's fundamentally changed in the company. But Gabe Fave, I'm a big proponent of Friday's price action, closing on the highs or lows for the week. Well, that's exactly what you did. You closed at 229.35. You're trading in the red a little bit. Last week's high was 231. And really, there's no, like Dennis said, there's I don't see a level where there's 2 or 3. The next area grouping of highs that I see is at 240. The path, how it could get to 240 is one, is a whole different thing. But keep an eye. I think Friday's price action, real key there. Get green, take out the 231, starts to stall there for a couple days. Maybe you get a little bit of profit taking. Use Friday's action in Apple for an indicator. You get the follow through to the last week's high, or a little bit of a resting period, or even a couple days of consolidation wouldn't hurt at this point.
Tesla is up here again this morning. I was long Tesla over the weekend. It's now a weekend trade where we just go long, and it seems like it gets bet up every Monday morning or Sunday night because retail frenzy just comes on the stock. It's the stock that is impervious to bad news, basically impervious to it. I have never in my 26-year career as a professional trader, I have never seen a stock so impervious to bad news. When you just look at the fundamentals of the company, they've deteriorated substantially, from a car company perspective, because sales down, significantly year over year. You're talking about a car multiple 180 times earnings here now because the sales keep going down, but it does not matter because the story here is intact. This is not about being a car company. It's about having everyone full self-drive, robotaxi, humanoids. You think about the expansion that robotaxi is going to see. Every time they get a new city, the stock pops up $7. So there's going to be other headlines that come here too. But if they announce, that car sales fell 50% tomorrow, the stock would go down $10 and then would rally 20. That is where it is. Musk has somehow created this Tesla car company with such a sexy story that it is almost impervious to bad news. I'm still long Tesla in my long-term portfolio. The valuation makes 0 sense. But if you think about it from the perspective that I've talked about it before, if they do eventually figure humanoids out, and if the brand damage eventually goes away, which the brand damage is there, that's why the sales are down. Stock hasn't really been hit, but the brand damage is there because the sales are going down. But if the brand damage ever starts to subside and the sales start to climb back slowly, then you go, because we're rallying on bad news. I mean, what happens if you start getting good news? So it's hard to be bearish of stock.
You know how we talked about the C3 AI coming out with their news at 7:30, when they should have probably waited. It still would be getting pounded, right? But how about the press department over there at Tesla? At 3:55 a.m., Elon Musk seeks to power British homes and businesses amid Tesla's dwindling EV sales. So, hey, why not be a power supplier in Britain? Make up for that. They're going in other areas. That news came out at 3:55, around before that 4 a.m. open. Instigated the bump, not too far off the pre-market high. Pre-market high 336.05, and well above that 50-day moving average here. Trying to find a next daily high coming into play, and it's not next daily high doesn't come into 343, but I'm sure we will develop some intermediate levels in between that. But nice moving Tesla up today, up 559.
Same thing. This week has a pile of stocks reporting. There's like 600 or 700 companies reporting here, but a lot of so not a lot of big names, Joel, but a lot of little retail darling names. So you're going to see a lot of retail pops. Even going to tonight, you get like multiple retail stocks. BBAI is one that's trading down. People are saying, why is BBAI down? I do think it's because of AI. Because I think, you got the AI and the ticker symbol and AI right there down. I'm not joking. Like, this is how simplistic this market is. The AI ticker symbol is down 30%. So now they're like, oh, I'm in all these other BBAI or, whatever other AI little names that are out there. But I do think there is a fall off in some of these names so BBAI is down 3%. I think it's because of AI. So that reports tonight. But, going to the retail darling names, ASTS, that reports tonight. Oklo reports tonight. Let's do Oklo for a second on technicals here, because there's been no nuclear name that's probably been hotter than this one. Company, I don't even know if it has sales yet, but it doesn't matter because the story is sexy as hell and we're hungry for energy. OKLO, Joel. Huge high bar going into this earnings report.
Ooh.
What are your thoughts on the technicals?
The technicals are saying you had a retreat, a little pullback, a little profit taking of let's just call it $11. So add 5.5 to that. That takes you back to the 79.5 area. That's well shy of Friday's high. So since the reports today, you are trading up 97 cents. But I just think you might have more natural sellers in this because you did pull off the high a little bit. That people been like, oh, if you want to get long ahead of the report, well, that was Friday or earlier this morning, in my opinion. Just no room. Or no daily highs to worry about here until 80.80. If you want another intermediate number, Thursday's close 79.32 for Oklo.
ASTS, another retail darling name. Quickly give us those technicals. They're going to report here tonight as well.
ASTS. Oh, still a little weak holding in, going into the report. I thought maybe I had a retracement on its hand. Nothing. If you wanted to buy this at the 50-day, I'll give you that at 45.45. So potential support at the 50-day moving average, ASTS.
CoreWeave, CRWV, is going to report on Tuesday. This is going to be a big report for this stock. It went all the way from 180 down to $100, and then finally found a bid here. Stock trading up. CORZ did report earnings on Friday night. Obviously, they are getting bought there in the CoreWeave deal. And CORZ was trading down, has popped all the way back. I did buy the dip on that because I'm like, hey, it's linked with CoreWeave anyway, so why is it trading down
Oh,
on its
yeah.
earnings report? It shouldn't matter. So I bought a 14. It's up at 14.39. I still think the earnings shouldn't matter that much. CoreWeave completely ignoring it though, so I do think risk arbitrage should bring the CORZ up even further. Possibly, I'm still long. CRWV though, give us some technicals.
Is there CoreWeave? Was there a rating in this too? I thought I saw that, but one of the worst engineered merger takeovers in the history of Wall Street. But that doesn't matter. CoreWeave is now on the rebound. Pre-market high 135.36. Perhaps that's got to be above Friday's high. Yeah, use Friday's high as potential support 130.98. And if you've been waiting for this to return to its 50-day moving average, not too far away at 139 even. Little leak here in the S&Ps, nothing major. We are being confronted this morning with last week's high, which was it also happened on 2 different days last week. So you got to respect the weekly highs in the 64.25, 64.30 area. Well, the triple Qs are just the triple Qs.
Quantum name RGTI is going to report Tuesday as well. I was long this one into the weekend. I already sold it. It actually popped Sunday night again. They pop, but it also popped this morning as well. It's starting to leak. So you're starting to see, to Joel's point, the S&Ps are leaking. A lot of these retail darling names are up substantially. Even a couple hours ago have started to leak away the gains here too. Maybe as money managers come to their desk, they're looking and saying, hey, maybe coin shouldn't be up 29 points, which it was up last night at one point in time. Not joking, Joel. You may not see this on your, well, you might see it because you only see 4 o'clock trade, but on Robinhood last night, COIN hit $339. Not joking. 339 it hit last night on Robinhood. It was up 9%. It was up almost 30 points. 28 points it was up. Now it's up 9. Some of these, like, just Sunday night moves are astoundingly stupid. Like, that was a crazy move. I was like, is there news here? I was like digging. I was like looking. I tweeted out, when it was up 9%, I was like, I was in shock. It was up that much. Again, it's up because of Bitcoin. But I mean, you got to give a perspective here too. Like, just because Bitcoin goes up 3%, does that mean Coinbase is supposed to go up 9%? It was a crazy move. So now it's up 3% and Bitcoin's up 3%. Makes a hell of a lot more sense. It was a crazy move last night.
Wow. No. My highest print that I have is 332.84.
But even that's up 22, and that's on the regular exchange. So it was up 29 on the Robinhood, but it was up 22. There's 4 a.m. traders too. Get all antsy in their pantsy and just got to come in. I mean, if you're so hungry for a stock that you just got to buy it, doing it on a Sunday night thin session or at 4 o'clock in the morning when there's not much liquidity out there may not be the best idea in the time to chase, because there's often willing sellers that are sleeping or not at their desk at a Sunday night. They're spending time with their families and doing maybe more important things in life. So just lesson for everybody who is like so hungry to chase stocks on a Sunday night. You're chasing something up 15, 20, 30%. You just got to be in it. A lot of times you're on the wrong side of the trade.
Wow, that is especially after the earnings beat. Was it earnings we had to beat down with Coinbase and now popping back up into it? So look at things settle down just a little bit. I would look at the earnings. I believe it was earnings when it dropped that high. Oh, but that's not even close to that. That's 337.24. Next daily high that's coming into place for you to trade was your high a week ago Friday at 324.
Big moves here. Guest should be here in just a minute, so we're just going to do a couple more stocks before that here. Here's an interesting one, on, because it reports Tuesday night, or actually, I don't know if it's Tuesday night or Tuesday morning, but it reports Tuesday, ONON. It's trading up. Again, the pre-earnings trade often does work, and it worked again. I took it long over the weekend. I already sold it here this morning for a quick 1% gain, which is always nice. Thoughts going in here, because on holdings, we've seen, and I keep talking about Lululemon, where these companies that have 40 PEs hold them for a while, these retail companies, but eventually succumb to growth slowing down. The fads end. The only one that holds a 40 PE forever is Costco. But if you look, Lululemon, 40, 70 times earnings at one point in time. Now it's sitting at 13 times earnings. So we saw Under Armour go through the same thing. I'm not saying On is going to go through that same thing. The story is still hot, but I think eventually it does. It's just a matter of timing and when. So if we look, at just, the quote and look at On, and people will get really mad at me saying that this could be, follow the same path as a Lululemon eventually, but this is just a story for retail. So if we just go into On, I'm going to get you the PE here right now. My system is running very slow here this morning. I don't know why. On PE is 42 times right now. That's the forward PE. The current PE is 58. I just don't think it's ever a great idea to invest in companies with PEs of 40 or 50. You can trade them, trade anything. You can always trade them, but don't get married to them and saying, I'm going to retire on this stock, because eventually multiple contraction comes for retail darlings. You're seeing a little bit of multiple contraction happening here right now and on. But I mean, the sales growth, can't show any signs of slowing, or those PEs drop substantially in a hurry. And I don't think it's great, how we've seen Lululemon come off so quickly. So just always be cautious when you're investing in these retail darlings with PEs of 50.
Third month of pretty thick red candles here. Had a rebound. Of course, that was probably the April low. Trading up 72 cents this morning. I will say ahead of the report. I don't know if it's someone anticipating a good report or trying to bring in some shorts ahead of it. Pair of lows, just under $45, $44.70, $44.91. If you're looking for another target on the upside here, you ran into sellers between 47.5 and 48, not on Friday, but 1, 2, 3, 4, 5 sessions in a row. So there's what you're looking at in shares of on. It's just a big decline. And if you're using Lululemon as an example here, boy, oh boy, I mean, the April low is now major resistance for Lululemon.
Another stock that is concerning me as well. Is the guest here?
He was here for a second and then he left. So let's while he's connecting here, see him. Let's throw one more in there and then we'll go to
Cava. Because Cava, we're doing all the Tuesday earnings, and when we come back from our guests, we can do a couple other ones to report too. We're trying to preview some of these here. CAVA, another, it's just a food, it's a restaurant, obviously, with a crazy multiple tier 2. And I'm just like, these aren't AI names, these aren't like super growth names. I mean, Cava's been fantastic, but eventually the slowdown in growth will happen for this one too. Cava's current PE is 70. Actually, its forward PE is 140. I don't know. Maybe the projections weren't that great, but even 71 times earnings for a restaurant seems absolutely ridiculous long term. And we've come off substantially. We're $172 and now we're 85. So again, you just got to know what you're buying, what you're coming into, because sometimes, you can get into some names and okay, like an NVIDIA we were trading. When I bought NVIDIA, I was trading 100 times current earnings. But the projections, we knew where it was going. This AI thing was going to take off. We knew their margins were huge. I mean, you had 60% margins on NVIDIA. The story was there that you knew the fundamentals were going to catch up. I don't know, when you're talking $10 billion restaurants, I mean, this is what the average restaurants are worth. The best comparison, obviously, for Cava is going to be CMG. And CMG has had a fantastic high multiple for a long time, but it's also down to 34 times earnings now, which is, a lot more manageable and reasonable here. And CMG has really been, kind of in the gutter here for the last couple of years and falling here now. So growth slowing has come for Chipotle as well. Eventually it will come for On. Eventually it will come for Cava. So I don't think these are great long-term investments. Although, again, what I will say, which I always say, is you can trade anything. Just know where your out is.
Okay, we do have our guest.
He's just getting ready. Give him 1 minute here. He's
getting ready here.
So give quick technicals, Cava, Joel, and then we'll
Cava. You want quick technicals? I'll give you quick technicals here. And let's see what happens here. If you want to buy this thing at the 50-day 83.30, that's what you hit yesterday. And you're talking about retail stocks here a little bit and coming into earnings and potential tariff headwinds. We're going to cover that with Danny Kersh from Piper Sandler. All right, bringing Danny Kersh to the stage. How you doing, Danny?
I'm doing great. Thanks for having me.
Yeah, we won't get into the Michigan talk, okay? Because the crowd, we do sports, but we more do markets. And so you're head of options trading at Piper Sandler. You've been in the options market for quite a long time. Just give us your top-down view here, and as far as the VIX, the volatility, where we're at.
Yeah, I mean, we're at all-time highs. S&P, we haven't been moving much the last month or so. We had a 1% sell down and then a 1% rally. We're not going anywhere. And a good example of this is today, actually, pre-market, we had someone who sold a straddle on the S&P that expires today for roughly $20. So for instance, today, the S&P is pricing in a 30 basis point move, meaning the market is saying we will not move, or the break even on the move today is 30 bips. And that I think makes sense. We haven't been moving much. We're at all-time highs. It seems like the market is sort of shaking off a lot of the tariff quote unquote risks. Rate cuts are being priced in, and there's a lot of I'd say we're getting close to euphoria, but I mean the VIX is still 16. It's not 12 yet. So we're getting close, but I don't think we're quite there yet, and we still see near-term upside.
All right, so they sold the straddle going
Yeah,
into
they're
this.
basically saying the S&P will not move 30 bips today. It's
Really?
a little bit degenerate, a little bit. I mean, it's a 9-hour trade.
Well, 0T. Well, that's perhaps. I mean, right now we have a 20-point range in the S&P, so it'll be interesting to see how that plays out. Sticking with this theme, Apple just ripping last week. Your tech stocks ripping. Nvidia making a new all-time high, but you don't want to buy the triple Q calls because they're too expensive, right?
No. So sorry. So what we're actually looking at is so the nice thing about working at Piper Sandler, we have a great macro team. I came from a firm called Cornerstone Macro that Piper Sandler acquired. We have this great single stock team, and sort of putting it all together. Our macro team has been flagging the one big beautiful bill has actually been super positive for large cap tech. Not that they need it, but the full expensing of R&D, the full expensing of CapEx has made tech the big winners here, and utilities. And so we see corporate taxes coming down pretty significantly for larger cap tech names like the Microsofts, the Amazons, the Apples. The names that are already winning are kind of winning more. And at the same time, we actually think calls are very cheap relative to puts. So volatility is low, but when we say skew is high, meaning the cost of a put relative to a call is very expensive, even though options overall are very cheap. So what's happened now is that going out to October, so we're in August, basically you can sell a 2-month 10% out of the money put on Qs. So basically saying, I don't think the Qs will drop by 10% in the next 2 months. You could sell one of those options and buy 3 times as many 10% out of the money calls. So basically the market is saying there's 3 times more likely that we sell off 10% than rally 10%. And we're saying, I don't know why fight it. We've got Qs goes up every day. Like if you're long them, if you're already long Qs, well, maybe you sell some of your stock and you buy this type of structure instead. Or if you want Qs exposure, put on this type of trade. And we think this makes a lot of sense as a way to get long and add right tail exposure. I get it, we're at highs, but this reminds me a lot of 2017, which also happened to be Trump's, first full year. You had a big tax plan pass. Volatility was super low in 2017. Then we got this rip into year end. I don't do you may or may not remember that.
Oh yeah.
And
Oh
these
yeah.
and these trades set up the exact same way. And people would tell us like, hey, well, if the trade sets up, that probably means the market's going down, right? Like if calls are so cheap, then maybe they're cheap for a reason. Markets are short, and that's just not the case. That just wasn't the case in 2017. It hasn't been the case the last few weeks. Earnings have been pretty solid. These are the names doing huge stock buybacks. These are names going to pay less in taxes. And a name like Microsoft, which is pretty unusual, stocks at all-time highs, had great earnings, and it's actually cutting staff. So it's being a little bit more cost conscious too. And so all of these sort of factors play into like why we think tech continue to rally, why large cap tech. I just want to fight it. And the fact that the market is saying, hey, here's some cheap calls, just take it. Take the calls. get long. And if you're already long Qs, maybe you swap out of some of your stock into these type of structures, whether it be sell your stock, buy calls, or sell your stock, sell a put, and then buy more calls.
Stock replacement strategy, right? I mean,
Exactly. And it's like derivative guys are supposed to be bearish and supposed to be doom and gloom. And hey, here's why the VIX is going to 80 and blah, blah, blah. It's like, dude, I got news for you. It's like, it's a lot easier to be long. Generally, the market goes up.
I mean, this is it. I mean, everybody is wanting to fight this tape. Like people call it the most hated rally. You know, I find myself doing it too. I'm like, do I want to chase all these names that just ran 100% in 3 months? I don't know. I'm having trouble doing it, but then they keep going. So, I mean, as a trader, you can trade anything. And I mean, why fight the momentum here? And it's been such a difficult trade. It's probably the hardest trade. Danny, it's got to be one of the hardest trades, calling the top and saying, this is it. This is the moment in time where stocks go down from this point in time for the next 5 years and the bears take over. I mean, every time it seems like in this market, the bears come out of their caves for a day. You know, the bulls just grab them and throw them back in the caves. It's so tough. And I mean, we've been rallying even, you know, on difficult news headlines sometimes. Like sometimes you're getting bad news where it seems like it should be bad news and the market turns around and rallies it again. So I think to your point, it's just been so tough to be a bear here. What are the signs? Like, are there signs that you look for to say, hey, maybe I shouldn't be chasing at this point in time? Maybe I should lay off on some of these longs? Are there certain signs you look for, Danny?
Yeah, so I think a few of it is like one, the VIX getting a little lower, I think below the teens. Like if you have a 12 or a 13 handle on VIX, it's just like an easy way to say, like, okay, people are pretty long. No one's really hedging. No one's really buying puts. That's a fine sign. And also, options have gotten very cheap then, so it's probably smart to look at puts. One other thing we look at, and it helps if you have a Bloomberg, if you have access to Bloomberg, but there are indices that track the equity exposure of what's called vol targeting strategies. So these are strategies where people get long the market or like the strategy gets long the market based on past realized volatility. So they'll incrementally buy equity exposure based on how much the market had moved in the past. So when realized volatility goes up, they sell their stocks. When it goes down, they buy their stocks. And these strategies basically went to as low exposure as you can possibly get during the peak of the Liberation Day when the market was moving up and down 10%. Now that things have calmed down, they keep adding more equity exposure. Now, they've been adding equity exposure for going on 2 months, and it's roughly 65% as high as it's been the last few years. So it's small, right? It's not every day. It's incremental again. But we think, over the next month, these strategies will get fully invested. And that's when you start looking at it, you got a super low VIX, you've got these vol targeting strategies, super long the equity market. That's where it's like, okay, everyone's in the boat. I don't think that's the case yet. And again, I mean, working in options, like my time horizon, we're doing 1 day trades, but it's probably like a month realistic. Like we do look at longer term trades. But I think over the next month, it's like you still have a lot of tailwinds beyond the fact that earnings just passed and you have, the Wall Street Journal even today talking about it. Share buybacks are record highs. So you just have a lot of support near term for the market. And there's also saying don't short a dull market. We always look for a catalyst to get bearish. Maybe that could, I guess, a high CPI tomorrow, although we think CPI is towards the low. We think it's in line, but could actually go be a little bit light with
oh,
yeah, it could be light because we think while goods might be up, that'll be offset by service inflation coming down. It's like money has to, money might be going a little bit high more into goods, but services will come down and perhaps housing will come down a little bit. So that could offset. So if you get a light inflation print, it's like we're just off to the races. And again, Qs in that situation, I think probably rally. Russell probably rallies more. But again, it's like I still don't. I don't know, unless you're like very bearish on CPI. I don't see the catalyst near term to be short. You can say it's tariffs, but that news is out. So it's like you got to change something.
That's what I want to ask you just on tariff inflation here, because we know we've had Blue Putnam, who's an economist, who's chief economist at CME for a long time there. And he's been saying that later in the year, it's like it lags so much. So even if tariffs are going to be an issue, probably doesn't start showing up till fourth quarter here. One, I just want to get your thoughts, on tariffs and being potentially inflationary here. And this is, obviously could be an issue coming, but I think it could be further down the road too. What are your thoughts there?
Yeah, I think there are winners and losers on the tariff front, and you saw it in this earnings report. Like if you look at restaurant earnings, they've been terrible, and I think it's like maybe we just do the not the most obvious loser, like a Target or a Walmart or an Amazon. It's like seems like they can actually push through some of these costs, and they're also
Right.
hyper efficient in how they're delivering goods. Like let's kind of like maybe go a step further, and I think restaurants are probably a short. I think that there's a combination of people's money is it's a tight it's not as tight a labor market as it used to be. You're seeing there's not really a huge pickup in layoffs, but there's also not a huge pickup in hiring. So I think people are sort of more cognizant of where they're spending their money. And I think restaurants, if you're going to look for a tariff loser, that to me, like there's a lot of companies that trade at ridiculous valuations. I don't know if you've looked at a name like Kava.
That's what we just did. We literally just did right before you came on, and we were just talking about.
Don't these
I compared it to Chipotle and saying, Chipotle used to carry at 100 times earnings, and then eventually the growth started to slow, and I'm like, eventually that probably comes for Kava too. So give me your thoughts, because we just did that comparison.
Yeah, so I think you got the combination of like people spending a little more money incrementally on things they actually need, and I just think these fast food or quick service restaurants are really really at risk. And that's the easiest thing to cut if you're thinking about where the tariff impact is. Like I think it's too hard to be like, okay, I'm going to short Costco or Walmart. That's insane to me. Just you don't need to short them, just don't buy them. But you can actually short restaurants. Like I think you saw this in some of these blowups on earnings, and that to me, like even Sweetgreen's just I think was off 20% off earnings. It's like
yes,
those are the names and then one other thing that we haven't really published on, but I've just been thinking about is that 2 years ago people started taking GLP-1s, and there were all these trades that everyone loved, right? We liked getting you're going to get long Lululemon, you're going to get long Nike, everyone's going to get healthier. You're going to fade all the grocery store, you're going to fade Kroger. It's like none of those trades really worked. But maybe 2 years later, we have 30 million plus people in the US on GLP-1s. Maybe the loser is just some of these restaurants, like Shake Shack. Look at their earnings. It's another stock where it's like stock off 15% post earnings. It's like, well, maybe the people who are taking GLP-1s maybe won't be going to Shake Shack 3 times a week. Maybe they're down to 1 time a week. So I think like to me, it's like these stocks are starting to break. They're traded super high multiples, and I think they're tariff losers. So it's just like the second degree losers. I think that's where you got to look.
Yeah, you hit retail earnings coming up in the next few weeks. We try and group stocks, Trump stocks, not Trump stocks, tariff stocks, non-tariff stocks. We've seen kind of a mixed bag coming out of the tariff effects, but any ones that are particularly on your radar here? Retail earnings season coming up, retail sales on Friday.
Yeah, I mean, we so just thinking of it more broadly, that's like one area where we're a little more cautious. Again, like we mentioned, restaurants, like XRT is just I think it's like roughly 50% of the XRT reports over the next 3 weeks. So you already had most of the S&P reported, but the XRT, these retail names sort of push out a little bit. We've been suggesting to clients buy puts on this XRT ETF for the next month. That's the one area, again, we're a little more cautious as opposed to sort of picking how stocks will do. Again, I wouldn't be sure like a Walmart, but if you wanted to look for another area of tariff loser, that would be like retail. That's where if you're worried about jobs, if you're worried about job growth, if you're worried about wages, if you're worried about tariff impact, like XRT, all this consumer discretionary spend, we think will be negatively impacted. So would look at like September, October XRT puts. It just seems to be like a broader trade. I know I'm not picking stocks here. And then
That's okay.
and if you want to buy a downside trade, EAT, it's I think it's Brinker.
Yep.
They report in the next few weeks. We've been pitching August puts for their earnings. But it's the same story. It's the same story. I just think these fast food restaurants, it's like buy puts on all of them, and I think 1 or 2 out of 3 will drop by 20%, and you'll triple your money. So, but you're already seeing it, right? I think the only one that like I noticed that was like, this is actually pretty good was Cake, which is a Cheesecake Factory, but that trades at a much more reasonable multiple. These names are trading at 100+ multiples. It's like I don't know. Good luck.
Talking fundamentals, a little bit of technicals here. That's Danny Kersh. He's had options trading. Got a good old Piper Sandler joining us for the first time on pre-market prep, and you're going to be back on again soon, Danny. And you know what? Go blue. I got
Go
some
blue.
deep
Well,
thoughts.
thank you for having me, and I'm sorry I had an issue getting online. I don't know how to use my phone. Sorry about that.
That's okay.
Thanks, Danny.
All right. Thanks again, Danny. We'll talk to you again real soon.
So Joel, Intel CEO going to meet at the White House today. Lip-Bu-Tan, this is Wall Street Journal reporting. Lip-Bu-Tan is set to meet with the president who called for his removal just last week. So this is going to be an interesting one. So Intel is popping here this morning. Wow. I mean, it's got to be awkward situation 101. CEO needs to resign immediately. And now he's going to the White House. Does Trump kiss and make up? I vote kiss and make up is what I vote, actually. It's like, oh, no, this is a good guy here, and we're going to get something done. So whatever happens here, is this a catalyst for Intel? Yeah, for sure it's a catalyst. What is said, though? Is there going to be some sweetheart deal where he comes on and he's got his arm around, the Intel CEO and saying, my buddy here, and we're going to, get Intel to be a great chip manufacturer again? Stock will pop 10, 15% if he said that. Or does he say, get out of here, we don't know deal
Well,
for
he
you,
wouldn't.
I don't like you.
You know what? He wouldn't have them. Is my take. And if Trump, I don't know. I just feel, and he's this has been floated out here too about someone else taking a stake in Intel and telling them what the hell to do. I wouldn't go against it. If it was reported that the guy wanted to go to the White House and Trump said no, then I'd be like, whoa. But Intel is Intel, and we all know what it's done. So I would look at it as a positive catalyst in the short term. But we got technicals. Let's see what happens. We'll see what the 2050 sellers want to do, because they were there the last 3 days. No, Friday not, but Tuesday, Wednesday, and Thursday. So it looks like they're still out there. Pre-market high 2060.
Upgrades, downgrades is a few of note here. Usually Monday night and Tuesday is the busiest days here, but we did get a few here over the weekend. I got FCX catching an upgrade to overweight at Morgan Stanley. That stock is trading up 2%. Starting to show some life. It sold off hard the last couple of weeks, and then, starting to put in a bottom here around 40 and starting to show a little bit of life. Quick technicals, FCX.
Nice move up. Coming in gonna do a tango here with the 50-day at 42.69. If you clear that, your next daily high comes in at 43.68. So you got a little bit of room. As always, kind of our general rule of thumb: if you're going with the momentum of these upgrades and downgrades, you don't want to wait until 10 or 15 minutes after the open. You want to see some follow through that opening price. But right now, maintaining its gains and doing a tango with the 50-day moving average.
Also, Morgan Stanley upgrading Elf Beauty to overweight. They obviously reported earnings last week, got the dip, and then it's kind of been clawing its way back. And now actually this morning trying to fill the gap up from the earnings. So the bounce back is here. Just looking inside the note, the opportunity here, driving an attractive entry point. Pronounced ELF stock volatility after an unexpectedly large U.S. top line slowdown in the last couple of quarters. Vague but disconcerting ELF guidance with temporary pressure points, punishing stock price reactions at other high growth SMID cap names. Worries over the low end U.S. consumer. This sounds great. A lack of visibility into the demand impacts from price increases, as well as little clarity from the road, has made ELF a very complicated and uncertain story. Huh? I just read that, and I don't know why you're upgrading it then. Upgrading from equal weight to overweight, but I guess they think it's not as bad as what some people think. So we'll say it's a valuation call.
If you're looking for a catalyst to fill the gap from earnings, well, you got it. You're only $2 away. 108.05 was the gap down on earnings day. So I'm sure a lot of people would like to see that level. They did, but you got to respect them for buying the dip. But decent amount of overhead supply here in Elf Beauty. And what's the one that Barry's in? That's EL, right?
EL.
Yeah.
It was a good call. Dumped all
Great call.
stocks, bought EL, and EL went straight up since he did that. So give Michael Burry his props. It seemed crazy at the time, but it's paid for him. It's done pretty well. Only earnings of note from this morning here, and I'm skipping over Ballard Power, and I'm skipping over Rum, and I'm skipping over Weight Watchers here. And I'm jumping over to Monday.com, MNDY, because it is down 46 points here this morning. Monday, which always reports on a Monday, and I like that they do that because it's fun. They reported a pretty good numbers, $1.09 versus 86 cents to 299 million versus 293 million. So they beat on the top and they beat on the bottom. They actually raised guidance too, just slightly to call it a guidance raise, but it's really not. 1.22 billion to 1.23 billion. Analyst estimates were 1.22 billion. So the guidance is actually in line. They say it's a guidance raise, but it doesn't look like a guidance raise to me. It looks like an inline quarter. But I mean, here's a stock that actually was kind of dipping into the report. And you think, oh, these numbers are fine. This should be a bounce back. Nope. Once the momentum's broken, it's ugly. And the momentum broke last week and the week before that. And now it's all the way down to its April lows. And what I said, when you've got a stock in your portfolio and it's sitting at its April lows, you're not in a great stock.
That April low is 202.01. Traded a little bit sub 200 in the pre-market low 197.09. So let's see if the bulls, I mean, wide range stock, probably a little bit more than the expected move. Let's see if someone's like, oh, I need to own this thing at 200 or sub 200, 198, 199, 200. We'll see if some bids form. If not, your next monthly low comes in at 188.01. Dennis, it's 9:01 here on pre-market prep, and got through the show without the Brentster popping in and helping us out. So it was kind of fun, kind of like the old days here.
And I was trying to work the charts in the background and working you're working the charts, was trying to work some of these banners and trying to do some of this other stuff too. And I'm not great at it, but I'm we were trying here. So Brentster, obviously, he's going to be back here tomorrow. So we miss Brentster for the day here. But good job, Joel. We got through it. And we're going to continue now over on the Stock Trader Network. So stocktradernetwork.com if you want to see and continue this conversation. We got some imbalances to look at. We got some opening trades to look at. We've got some closing some of these trades that we had over the weekend because there's some really good ones in there too. But, on 60,000 to buy here at the open. SMR 49,000 to buy here at the open. Oklo 25,000 to buy here at the open. We're going to dig down deeper into some of these imbalances. Obviously, NASDAQ imbalances come out 29.25 too, which can be a catalyst for moves as well. So come join us, STN Room. Let's go.